So I'm assuming most people in the audience here are already familiar with Electric Capital, but for those who aren't, you want to just introduce Electric Capital and your role there?
Yeah, sure. So my name's Maria. I'm one of the general partners at Electric Capital. Electric is a crypto-focused VC firm. So we only invest in crypto. We were founded in 2018. We invest at the early stage. Last year, we raised about $1 billion across 2 funds. I would say 2 things make us very unique. One is that everyone on the investment team has either started a company or has been early stage at a company. And similarly, everyone on the investment team has an engineering background. And in fact, more than 50% of our team are either engineers or PMs or designers. And so it's always been our philosophy that there's a lot of open data and open source stuff happening in crypto. And we build a lot of things, a lot of public goods. One of the things is developer report, which is what we're talking about today. We've also built something called CodeSlaw, which is a search engine for verified smart contracts. And so we really like to push out public goods and kind of build alongside the ecosystem.
Speaking more to like the developer report, which I think has really pushed the awareness and brand of Electric Capital so far forward. What's kind of the original genesis and inspiration behind gathering all of these metrics and putting out such a high quality report on the state of the developer ecosystem?
Yeah, it's a great question. Well, I think crypto is incredibly unique in that, at its height, it was a $3 trillion industry where a lot of the most important pieces of infrastructure is open source. Bitcoin is open source, Ethereum is open source, Cosmos is open source. It's ingrained in the ethos. And so in no other industry can you kind of look through to see, okay, well, if the most important pieces of infrastructure are open source, then what are the devs doing, right? Like when are they committing code? Who are they? What chains are they working on? What pieces of infrastructure are they working on? And so it invites a lot of these questions. The background on the team, Curtis, who's one of the founders at Electric, he has a distributed compute background. And so he started creating the early infrastructure to just gather some of these developer metrics. In order to get these metrics, we actually crawl hundreds of millions of commits and fingerprint every single code commit in order to dedupe developers, remove bots, but also to look for original code contributions. Because open source has a lot of forking, which is not a bad thing. It's just, it also helps us develop code faster. But we fingerprint each and every commit to see who's actually contributing original code and how many developers there are there. And in 2018, there just weren't a lot of people talking about this. I think there were a lot of analysis around prices, but what we were really curious about was just well, what are people actually building and where are they building these things? And so we pushed out the first report, I think sometime in 2018 or 2019, and have been doing an annual report since then.
Yeah, it's a very refreshing way to view the crypto ecosystem, so definitely give them a read if you haven't already. And speaking to now the bear market, right? I think a lot of us are kind of wondering, as we've transitioned out of a less euphoric moment in time, how have these developer metrics evolved? How have the ways developers are active in the space changed? How have those levels moved around as we've entered the bear?
Yeah, absolutely. So right now, we're sitting at about 21,000 monthly active open source developers. This is an undercounting of the developers in the space because it's purely open source. This means Coinbase developers are not part of this count, right? Games, a lot of them are closed source. They're not part of this count. But right now, we're at 21,000 monthly active. At peak, we were maybe around 26,000 monthly active. And so we've definitely seen a decline since then. As a comparison to the last bear market in 2018, 2019, and parts of 2020, prices fell over 90%, but developers stayed flat. And I think in this bear market, prices fell 60, 70, 80%. And we are seeing a slight decline in developers. And so maybe this is actually a good time to bring in my slides. So one of the things we were really curious about is, okay, well, developers have declined, but who left? And does it matter? Does it hurt that
Yeah.
developers left? So one of the things that we did was segment developers by how long they've been working in crypto. We put them into 3 buckets. Newcomers, who are developers who have been in crypto for less than a year. Emerging, which is developers who have been here for 1 to 2 years. And then established, which is developers who have been here for 2 or more years. And when you segment developer numbers that way, what you see is that established developers are flat. They haven't gone anywhere. They've increased by 1%, so essentially flat. Emerging developers have increased. And so what has led to the developer decline? It turns out that the devs who left were the newcomers who have worked in crypto for less than 12 months. And so they've actually declined more than 50%. This is also augmented by the fact that fewer and fewer new developers are entering crypto. And so I think this intuitively and qualitatively probably feels right to us, which is a lot of developers who peeked their heads in during hackathons in the bull market, a lot of people who freshly joined at the peak of the market. Those developers are the ones who kind of are more liable to leave right now, and we're seeing those numbers dwindling. But the developers who have been here for 1 year or more, they're staying. They're still here. They're building. And what's really interesting, we talked about, like, how do you compare that with the last market? Well, so the second chart, which is this is the normalized view of looking at that data. And you'll see like a very interesting kind of wave pattern here. And so the green is the newcomer devs. So what we're seeing is that during the bull market, newcomers account for 70% at peak of total open source developers in crypto. In the bear markets, you see the opposite, right? That's where the orange and blue kind of surge up into this hill. So the opposite is true, where now we're at a point where 65% of all developers are non-newcomers, so who have been here for a year or more. And so it kind of begs the question of like, okay, so devs who have been here for less than 12 months have left. Like, does that matter? It turns out that it definitely hurts, but devs who left were only responsible for less than 20% of all code commits. And the devs who stay account for 80% of code commits. So what this tells us is that the developers who are actively working, who are pushing most of the code, who are putting most of the work in, they are here. They're very, very strong. And they're still, at least based on the numbers we're seeing, still very committed to the space.
That's awesome. It's really good to see that people are hanging around, people are still building, and it's nice to know that some of the tourists have left. Hopefully won't have too large an impact. One of the things that I do wonder about is these devs who have stayed here for a long time, the ones who are committed to the crypto space, what's their mobility like? Are they usually sticking with one project, sticking with one ecosystem, or as new trends emerge within the crypto space, do they transition and start working on these kinds of projects? Just overall, how mobile are these devs?
The answer is that it depends. A lot of developers, I would say most developers develop for fewer than 2 chains, right? Meaning like that's the average, right? So some developers develop for more, but most only develop for 1 chain. Now the exception to that is the EVM ecosystem. And historically what we've seen is developers come in and they're like, hey, I'm going to build this for Ethereum, right? Or I'm going to build this for Polygon. I'm going to build this for Avalanche. That's just not true anymore. Now developers are coming in and they're saying, we're going to build for EVM, and then we're going to push to like 5 different EVM chains at the same time. So that's a new paradigm that we're seeing that has been gaining strength over the years, but this year it's been particularly clear to us that EVM it's just a different flavor. It's almost a universe, right? It's not even an ecosystem anymore. It's a universe of different chains, and developers first decide on EVM and then decide on the chains. So that's kind of the exception, right? Versus Solana devs, still on Solana, and a lot of the layer 2s, Near devs, still on Near. And so if you're kind of in one of these all L1s, you tend to kind of stick around in your all L1. The other exceptions would be, Cosmos is a little bit of a universe as well. Polkadot is another kind of universe where people migrate within, for Cosmos, like migrate within like IBC connected chains and things like that.
Within these universes, we'd be remiss to not bring up Friend.Tech recently and all that stuff, the large social movement.
Yeah.
Are the devs chasing after these new trends where they're still in their universe, they're committed, whether EVM or the Cosmos ecosystem or near Solana, but do they kind of move aggressively on these new trends? Are they chasing after them?
It's an excellent question. I think that's why it's really important to also look at on-chain metrics in addition to the developer metrics that we're looking at here. So it's hard to tell because, frankly, a lot of these consumer-facing applications are closed source, and that's where it's hard to see, like, okay, well, what are developers building? Like, how are they building it? Who's building it? But if you look at kind of on-chain development and on-chain deployments, I think we're still holding very strong for on-chain deployments. So I think we were at around 70,000 unique deployers in August across most of the major EVM chains. So this is not counting Solana, not counting a lot of the L1s, and does not even account for all the EVM. And so, I would say people are still really developing, but there is kind of a question mark now where as more and more applications come in, there's closed source code, front ends tend to be closed source. What are these devs building? It's a good question.
Yeah, I think another thing many people in the audience would probably love to know is, since you and the team have such a wide view of the crypto ecosystem, what trends do you guys think need more dev activity? Is there anything you see like this would be a boom if devs could acknowledge this and realize that they should go spend some time here?
I have maybe this is a little bit of a different take. So. I think a lot of people might answer, there's infrastructure improvements, there's UX improvements, but I tend to think that technology moves the other way, where something really awesome and fun happens first that completely breaks everything, breaks the entire infrastructure, and then people rush in and realize where the holes are, and then they fix the infrastructure. This is something that we saw with CryptoKitties, where CryptoKitties almost brought Ethereum to its knees, right? Like it was bad. Gas prices were astronomical. Nothing was getting through, and I think that sparked a lot of conversations around oh, well, Ethereum needs to scale, right? If we can't handle one breakout NFT project, how are we going to be the financial backbone? And so I think it prompted a lot of these conversations into scaling. It actually prompted MetaMask to update their UI to allow people to update their gas costs and be a little bit more transparent around what's happening with gas. So to answer your question, I think developers who are working on applications is probably the most important thing because if you work on something fun, if you work on something awesome, it's going to completely break, 90 different things that's in crypto. But that's how we're going to improve, because people are going to come in and they're going to realize what's broken and then fix it, and then we'll have something actually scalable in the next iteration. Yeah,
move fast and break things seems to be a pretty consistent theme. It seems to go well. Real quickly, I guess, what's something you're just most excited about in this space? Kind of close us off with something you're looking forward to.
Yeah, well, I mean, definitely consumer-facing applications where anyone can jump in and use it. I think we're at a stage now where a lot of these applications can be built in a few months. And that was unheard of in 2018 when I entered the space. People were spending a year or more just building the infrastructure to enable some of the fun use cases they envisioned. Now developers can jump in and build something that users can start playing around with in 2 months. And so I think going into the next year, I think what we'll see is a lot of experimentation, a lot of funky things that's going to use crypto as a back end and be targeted at consumers. And so I think we're probably everyday people can probably start using a lot of these crypto applications, which I'm super psyched for, super excited for.
Awesome. The consumer apps are coming, so
they
looking forward to it. Thank you so much for your wonderful perspective on everything. I learned a lot. The charts, as always, are great, so thank you so much.
Thank you. I appreciate it.